Hello, money magnets. So good to see everybody. Hope you guys are having a safe and awesome weekend. What we're looking at here is the weekly chart of the SPY. We had a setup building up the last couple of weeks with this inside candle setup. We can see on the week of July 28th, we lost the 5 weekly moving average, the 5 WMA. We recaptured the 5 WMA the following week, the August 4th week. And then we had the setup where we had an inside candle and the high of the mother candle was at 639.85. We can see here that last week SPY ended the week with a breakout on the weekly chart. So based on the weekly chart, for SPY to remain in breakout mode, the price must stay above 639.85. And if SPY stays in breakout mode, that means it's bullish. And if it's bullish, more upside is possible. However, based on this weekly chart, for SPY to get into false breakout mode, it would need to break back below 639.85. In other words, this level is my equilibrium level for the week. Above it, I recommend for us to stay and remain bullish, and below it, that's the safer time to favor a pullback. Now, this is based on the weekly chart. We're going to go down to the daily chart and check out the context there. And we can see that recently we closed right around this uptrend line. It looks kind of like a breakdown. Some may call it a breakdown, but keep in mind this uptrend line slopes up. So if SPY doesn't get above 646 next week, it might as well be a breakdown. But also something else to notice is that SPY still managed to find buying pressure off of the 5 DMA, the daily moving average, which means we are still overall bullish. The price action is still overall bullish. So bullish on the weekly chart and bullish on the daily chart still. So as far as supports that I have support at 642.5, 641, and then 639.85. If it's pullback time or if it's time to be bearish, those are the levels you want to see fail. The 5 DMA and especially that 639.85 level based on the weekly chart, but also based on the daily chart, because we can see we had that breakout on August 12th. We need the false breakout setup for us to get bearish. Below 639.85 is your bearish sign. If we do pull back and hit that level, I will only trust the bounce off of that level. Let's say it hits 639.85 and then it recaptures 641 and 642.5. That's when I would start to trust the bounce. From there, I need to see a breakout of 644 and 646. Now 644 is a macro level, Fibonacci level. If I zoom out here, you can see the purple lines, my macro level Fibonacci levels. And remember, we had that breakout on the daily chart for my last macro level Fib level. We had that breakout right there and it led to more upside. So from here, if bulls want more upside, clearing 644 is a must. And of course, taking out the sell zone at 646, the bears has been stepping up with sell orders around that area. They must get above 644 and 646. As far as the chop zone goes, 646 down to 642.5. That's my chop zone. Anything in between that zone is overall noise. But if we can break it down, 642.5, possibly take out the 5 DMA and a back test of 639.85 will be possible. And below that is when the bigger, much bigger move pullback would be in play. But above 644 and 646, this bull run, this uptrend is not over. I have 647.7, 650, and 652 plus as my targets to the upside. QQQ lost the 5 DMA last Friday. It also lost this uptrend line, multi-week uptrend line all month in August. QQQ has been riding up this uptrend line, but it lost it. So for me to be bullish, if this could be an attack on the area of liquidity, they may have went for the stop losses. If that is the case, 578 and 580 must recapture along with 582 and 583.4. Above 583.4, I will feel more comfortable declaring that the bull trend continues. As of right now, it's a bit questionable. If there is bearish follow through, the price must stay below 578 and 580. 580 was an important fib level and 578 is around where the 5 DMA is. So staying below those levels would be a start. Bearish follow through for bearish movement, it must take out 576, 574.6, and 573. If the bears can take out those levels, at least on the 15 to 30 minute chart, we can definitely definitely continue a lot lower. Now 574.6 was a previous all-time pivot high. The breakout of that level led to new all-time highs. Back tests of previous breakout levels are not necessarily bearish. However, if we break it down 574.6 and it turns back to resistance, that would be a false breakout setup, and that's the time to really get bearish on QQQ. NVDA, so far what we saw on Friday was an attack on liquidity, the area of liquidity, and you can see my light blue uptrend line. It was another bounce, a third bounce off that trend line. So overall, not bearish, it's not bullish either. It is overall bullish, but the short term, it's still in the chop mode. For the chop mode to end, we need those closes below 180 and 175. We've yet to get it. And if it is a bounce from here, because it did hit the bottom of the chop range, if it is a bounce from here, they'll need to clear 182 to get us back to 184. Chop phase does not end until we get a close or a multi-day close either above 184 or below 180. So still, guys, I'm overall neutral on NVDA until we break that range. And I tell you this, it may suck that it is chopping, but I tell you this, when it finally break this range, based on how long it decided to consolidate for, because it could have, it's been going up, and to cool the RSI down, it could have given us the old-fashioned pullback. Instead, it chopped sideways, consolidating through time. So this makes me feel and believe, because I've seen it a lot of times before, that when it finally does break the range, it's going to be explosive. It's going to be big. We have earnings around the corner, but it's a good chance it'll give us that move before earnings. Be prepared. But we know the level, 180 to the 184 zone. Whichever way it breaks, that is the way we bet to. Tesla, looking like it still wants to stay in pullback mode. It closed at 330.5, which is officially below a critical Fibonacci level that I have. As long as below 331.5, Tesla can remain in pullback mode, and we can drop another $10 to $15 to the downside. For me to trust any bounce, the first thing Tesla must do to be bullish is recapture 331.5 to invalidate last Friday's breakdown. The next thing it needs to do is recapture 337 to get back above the 5 DMA. Once they can do that, I would favor 340, and there's a good chance we head back to the Fibonacci level at 347.5. I would not be surprised if we break through it, but that's what the bulls need to do, recapture 331.5 and 337. Otherwise, I would remain bearish as long as below 331.5. 330, 328, 326 or lower will be in play, but I really do think we can drop another $10 to $15 to the downside. Keep in mind my fib level at 320.5, definitely an important level to watch and definitely in play as long as below 331.5. Coin, overall looking bearish still. The 328 and 334 level, they could not recapture it. The bulls could not recapture it. They tried. Instead, we're getting some lower closes. We also closed below one of my levels. I had a level around the 317.5 to 318 area. Coin closed around 317.55. So overall, still lower closes. And I tell you, the next support I have is at 316 and 314.5. If those levels fail, we're likely dropping another $10 to $20, likely going back down to the 307 to the 300 range, maybe lower. But once again, I'll still stand by what I said. I cannot get bullish on coin until it recaptures 328 and the 334 level. As of right now, it's still looking bearish and more downside is looking possible. IWM, lower close on Friday compared to what I had on Thursday, but it did not close below the critical level of 226.7. Overall, there was some buying pressure, but the bulls just can't play defense. They need to play offense, and if they have the strength to play offense, they need to clear 228 and 230. If that happens, more upside incoming. 232, 234, 235.5 and 238 definitely incoming. I will get bearish or favor more downside on IWM when it can break down 226.7 and if it can break down 225. If it does, I expect another $5 to $10 move to the downside. And last but certainly not least, here is Amazon. Now Amazon had a decent body green candle, decent body on Thursday, more body than wick, and then on Friday I had a choppy candle. So we'll see if on Monday we can get a decent body candle move either to the upside or to the downside. But if it is going to be bearish, staying below 231 is a start, and breaking down 229.8 is needed for the bears. Watch the low of this choppy candle we had on Friday. If that level breaks down 229.8, we can definitely drop more down to 227, 224, 221, 219 and 217.3. But if we're above 231 and we take out resistance at 232.5 and 234, I would definitely favor more upside to 236 plus, maybe even up to 240. And yeah, that's what I have for you guys today. I hope I was able to deliver you guys some value, and I just want to say I appreciate you guys for being here, and it really amazes me that you guys are believing that you are money magnets. I'm seeing how a lot of you guys have been commenting and talking, and it brings joy to my heart to see that you guys are believing that you are money magnets, that you are master traders, because that's how it starts. It starts from the inside. It starts with believing, and then the belief in yourself gives you the inspired actions to take. You just feel inspired. Sometimes you don't know what to do. You just believe in yourself, and then some way, somehow, God starts sending you messages and you feel inspired to do certain things, and the next thing you know, you're making more than 6 figures a year. It's incredible. It's possible. If you believe it, it's true. So believe. I love y'all. Peace.